first year Camp Kotokers together. He's with Spectra Asset, and he writes a piece called AMFX, which is very widely read. And the topic is de-globalization or globalization. And if I could say it 3 times fast, I'll try to.
Okay, so what I would say generally is that I think you have to separate de-globalization in terms of like the liberal kind of world that we existed in politically, and then the economic side. And I feel like the political side is a lot more clear in terms of like regionalization and China-US separating. But then the implications for the economic side I don't think are quite as obvious. Like if you look at like UK trade with the EU is pretty much at all-time highs. China-US trade is still pretty much near where it was. And in fact, pretty much world trade peaked in 2008. So de-globalization related to supply chains and onshoring and all that stuff is not really anything new. That's been going on since 2008. Like the Buy America was in 2008 as well. So this like populist, nationalist, de-globalization kind of theme has really existed now for 14 years, I would say. And I think kind of this goes to what Leland was saying, because he's talking about like a lot of very specific areas where it impacts, is that it's not this broad structural macro thing really. What it is like a very sector by sector, business by business, country by country kind of impact. So instead of just saying like, oh, there's going to be all this onshoring and inflation's going to rise because it's so much more expensive, I think the reality is much more nuanced in that you have these regional blocks, but instead of sourcing from China, maybe there's a bit more Vietnam. Maybe the US goes a little bit more Mexico because it's closer and there's a little bit more JIT aspect. But at the same time, the cost of onshoring is very high, and the evidence of onshoring, other than equities related to onshoring, have done very well. But the actual evidence for a lot of onshoring, like in terms of like massive capital investment coming back to the United States, isn't really that strong in my opinion. I mean, of course we're early in this, but to me it seems like, you know, insuring for the next pandemic or the next supply chain shock is going to become, it's going to seem very expensive very quickly when, you know, we've run things a certain way for many, many years. And there was a reason why we did that, is because it's the cheapest way to run things. And to then go to a much more expensive way to have this pandemic insurance or supply chain shock insurance, I feel like it's kind of like recency bias, where people saw this shock and now like, oh, everyone's going to adjust for it. I don't actually think it's going to be as significant as people think. So I feel like it's going to be much more of something that already started in 08, that's been going on for a long time, and it's a very gradual thing, and it's very expensive to onshore, especially in the US. So, and then the China-US trade relationship, you know, remains pretty strong. Obviously, it's changed, and there's tariffs, and the cost of doing it is different. But to me, I think it's much more, you have to look at all these relationships and politics, and then how they affect individual things. So like a very big impact is the terms of trade of Japan and Europe, and specifically Europe in energy supply, as Russia's like become a different kind of actor in the world. And so that's like political deglobalization or fracturing that's led to like a specific thing, which is an energy crisis in Europe. And I think it's going to be much more like that, where there's like individual areas like chips, European energy. You basically have to look at whatever your thing is that you do and find the ways that it's impacted. It's not this big global macro story. And so like a big mistake that people made a whole bunch of times, I mean really since 1968, is thinking that the dollar's dominance is kind of in jeopardy because of X, Y, Z. And every time one of those things happens, the dollar actually emerges more resilient. So the SWIFT ban, a lot of people sold dollars and bought gold on that, thinking that China would be now viewed as like non-ally, rogue actor, whatever. So they're going to start trying to convert their reserves into gold or non-US dollar assets. The fact is, you just can't. Like, there's no big liquid markets that are going to take $2 trillion worth of reserves. And so, yeah, maybe at the margin they can make some adjustments. But the SWIFT ban, first of all, already happened with Iran, so it wasn't as epic as people were describing it as. So people were viewing the weaponization of the dollar as like this super bearish dollar thing. And to me, it's not. And then crypto has also kind of reinforced the power of the dollar. Like everything in crypto is a $1 trillion ecosystem, all based on stable coins that are all dollar based. And really what's ended up happening is there's one situation where the dollar weakens, which is synchronized global growth. And so you had that from 02 to 06, and in 18 you had it, and you have it here and there. But then there's basically all these situations where the dollar does well, and then a narrow kind of area in the cycle where the dollar does poorly. And so I think the sort of like Dalio, demise of the dollar and all that stuff, it's super interesting, and probably maybe it's relevant on some time scale that like exceeds all of our lifetimes.
Yeah.
But I just feel like it's useless as a framework. So like the idea that the dollar is going to stop being the reserve currency anytime in our lifetimes, to me, just is a waste of time. Like it's just not a worthwhile. It's not like, so there's always the conflict between the structural story and then the cyclical story. And so there is maybe this structural story of like US hegemony over the next 100 years or whatever. But it's such a slow moving story that it's not even relevant, I don't think, to any time horizon. And of course the external value of the dollar has pretty much gone straight up in the last couple of years as well. And it's always about where everyone is in the cycle, how much risk aversion there is. And I feel like anyone that's using like this demise of the dollar stuff in their framework or investing framework at all, it's just not right. And then the same mistake has been made in crypto, which is people that are bullish crypto have this structural view, which I agree with, at least with Bitcoin, is that if you're in a world of like fiat debasement, MMT, no anchor between revenue and spending, so like there used to be kind of at least like a fake, how are we going to pay for it question when new spending emerged. And now people don't even ask the question, like it doesn't matter, we're not going to pay for it. So the question of like how are we going to pay for it isn't even a thing anymore. And to me that's like an underlying structural headwind for crypto in the long run. But then it's still a cyclical asset that responds to Fed tightening, and you can't have a fiat debasement story when the Fed's hiking. So I think that's like a big thing that people missed in crypto was this, even if you're structurally bullish to the maximalist kind of degree, there's still a cyclical element. And so the same mistake people make with the dollar is viewing this structural demise of the dollar, which yeah, maybe it's true or maybe it's not. But the fact is it doesn't matter, because you like, we've talked about this many times, but like the alternatives in terms of, so actually part of 02 to 06 was a little bit of adoption of the euro as a feasible reserve currency, but people kind of got to 20%, and that's about as much as people are going to go to. And then like the yuan, and people will buy it, but there's like rule of law and like a lot of issues with it. And also essentially it's mostly kind of semi-pegged to the dollar off and on with like brief repricings. So there isn't really, other than like nibbling at the edges, there isn't really an alternative to US capital markets. They're just so big that you can never go into Canadian provincial bonds or Canadian even here and there. But to me, it's just like the dollar just keeps on showing through every single thing, that every single challenge, that it's the best currency to transact in around the world. And like even if they're doing, say oil's 10% of global trade, and they're doing 10% of that in eventually like China to Russia through yuan, that's 1% of all the dollar flows that are happening. So I feel like, and it's interesting if you go back, I did this one time, you can find almost every single year since 1968 a magazine cover about the demise of the dollar. So it'd be like Time Magazine, The Economist, like whatever, there's books and all that. It's just like a fun theme for people to talk about because it's interesting and feels like historic or whatever, but I just feel like it's not useful. I have to look under the hood of all these things and see, okay, what are the connections and what are the transmission mechanisms, and not just have this monolithic look of like de-globalization is going to raise inflation. Well, maybe it will, maybe it won't, but if it does, it's going to be in specific industries where the economics of reshoring are reasonable, and it's not going to influence many other industries.
Not very many, you don't hear enough talk about Japan kind of hitting this moment that they're in right now, and you know, we've all been talking about the yen being a train wreck for our entire careers. And yet it seems like we're finally it finally feels like we're at a point where something's going to give, because they're the only central bank in the world anymore that is really insisting on staying in this easing stance. So do you, are we there, or is this going to be a nothing burger forever?
No, I think we're close. So like the politics of inflation have changed in Japan quite a bit. So Kuroda made some kind of like jokey comments about inflation being great and got like absolutely slammed in parliament and stuff. And so for the first time, I mean, dollar yen's gone from 75 to 135, so they've kind of like mission accomplished essentially. And now you're also starting to see a split between central bank and the MOF, where like the MOF is saying yen depreciation is no longer good. So the problem that they have is getting out of yield curve control, so they've been capping the 10-year at 25 basis points, is just figuring out essentially like the strategically optimal time to end it. So what they don't want to do is do it when there's a lot of pressure on rates. So they'll probably do it at a counterintuitive time when 10-year yields at 240 or something like that, when there isn't a lot of upward pressure on rates. But so many people have that trade again, the short JGB, like Widowmaker trade. But to me,
Well, I'm speaking more like existentially, like,
yeah,
all these decades we've been like tick tock, tick tock, tick tock.
Yeah, I don't think it's really like an existential thing. To me, it's like the currency was massively overvalued and now it's somewhat undervalued, and it's sort of probably like a reestablishment of equilibrium where, you know, dollar yen at 75 was insane and 135 might be like a little bit tiny bit insane the other way. I don't know, I don't really buy the whole like debt bomb and all that stuff. I mean, there's a whole bunch of reasons which most people probably know about, but like it's a lot of it's internal debt and all that. And their cost of financing it is still essentially zero. So I feel like we've kind of just done what we need to do, and now the trade's probably over, and I don't think there's like some huge blow up coming. It's just more like we already kind of had the blow up, right? It's moved a lot.
On Mira's behalf, are you bullish Argentinian century bonds?
I'm always bullish Argentina.
From a currency market standpoint, where are we on the peak inflation story, not just in the U.S., but from a global standpoint?
Yeah, I mean, to me, the issue with inflation is that there's the reality of commodity prices and a lot of things are getting better, but then measured inflation has a lot of inertia and has a lot of like BS factor with OER and stuff like that. And the Fed's focused on measured inflation, not on like what's actually happening in real time. So to me, that means the Fed's going to be a lot tighter and inflation's going to come down slower. And then there's a lot of reasons why the floor will be higher as well. So to me, it's inevitable that inflation will peak around now just because of base effects, because if you look at where oil was and all that, and commodities. So the commodity pressure, and there's other pressures that have relieved, but the inertia and a lot of the factors that have been causing the inflation still remain. And there's a lot of like delayed, I mean, that's what the inertia is delayed reaction in wages, in McDonald's raising prices of cheeseburgers and all that kind of stuff. It doesn't all happen instantaneously. So to me, we're peaking, but we're then going to come to a high floor, which is going to be a big problem for everything.
Are we having a strong dollar or a weak euro?
I mean, it's both. So like one of the most interesting things that's happened so I started in 1995, is Germany was always like massive trade and current account surplus. And same with Japan, and both of them are not now. And a lot of it has to do with the distribution of energy and how energy has been produced and consumed around the world. And then Russia was like the cherry on the top of all that. So it's both, but it's definitely a strong dollar as well. But to your point, actually EM has done well in this cycle compared to normal. Like it's actually been euro and yen have been the real big decliners. And normally in Fed tightening, it would be like Brazil and Mexico, and those countries would be getting slammed the most. But they actually went first, so they hiked. The real rates are actually high in those countries.
It was related to the euro question. How you guys talk about euro, whether it's this globalization discussion, whether it even makes sense, because you didn't even mention euro in this discussion.
Yeah, I mean, that's interesting. I guess the geopolitical side of it is obviously happening there too. There's decoupling, obviously Russia, energy supplies and all that. It's funny that if you look at like the engines of growth in the world, China, Europe, Japan, and the US, They're all questionable, other than I guess US is still fine. But to me, Europe just looks really bad, especially heading into the winter. Like, the only reason people have kind of stopped focusing on Europe very recently is that there's just been other things like FOMC and Taiwan and Pelosi and all that kind of stuff. But there's like this constantly, UK is the same, like just textbook stagflation in Europe and the UK. So to me, it looks really bad. But yeah, I mean, I don't know why we omitted it. It's an important part of this discussion, honestly.
Yeah, it's telling you.
Anybody?
Just to throw the cat in the room back. On the globalization, de-globalization argument, where do you think things like the WTO or the United Nations fit into this whole debate? I mean, they really have been dead cats in the last couple of years. UN and all these security crises, nor do we see WTO as dead for all intents and purposes. Does it matter?
I mean, to me, it's much more political than economic, and like, I guess those things have slow burn, you know, implications, but like you saw with the tariffs and all that, the WTO is only useful when people believe in it, and so I don't think that stuff matters that much, honestly. It's more political than economic to me.
Let's go to final thoughts. Do you have just a nugget out of both of you that you want to leave the group with?
I mean, to me, it's, as an investor, is to look at it not in a monolithic way, but in a very targeted way at the stuff that you care about and try to figure out how these changes and flows impact your thing, as opposed to thinking of it as this global macro story, because I don't think it is. I think it's like this series of hundreds of interconnected, you know, micro stories that are all kind of related, but not all one story.
Well, let's thank Alex. And of course, the conversation can continue. They are